This is AIO Financial. Thank you for joining me. I'm Bill Holliday. I have an interview with Yasmin Bilger. She leads the Engine Number One's ETF business. Engine Number One offers two ETFs, two investment funds, and they operate under the premise that investors have the power to transform companies, create jobs, reverse climate change, fight racial and gender injustice, bring greater accountability to the economy's largest companies. Let's get to the interview. All right. Hi, Yasmin. Thank you for joining me.
Thanks so much for having me on today.
So we want to talk about Engine Number One. I have only heard of it just this last year, but I guess it has a little bit more time. But could you give us a little background about just what it is, who started it, how long it's been going on, and then we'll get into your approach.
Sure. Yeah, absolutely. So Engine Number One launched about a year and a half ago, and we are an investment firm that is focused on linking environmental and social issues to shareholder value. We were founded by a gentleman named Chris James, and we were founded on the shared belief, I would say, across employees at this firm, that the investments that a company makes in its employees, in its customers, in its communities, and in the environment are actually related in many ways to its ability to drive long-term shareholder value. Or said another way, a lot of the conversation on sustainable investing really ends up focusing on the ideology or morality of sustainable investing. We're very much focused on the economics, and we believe that in a world of more transparency, that actually a lot of the negative and positive impacts that companies have across broad stakeholders will increasingly be reflected in what the market values that company at. Things like government regulation or shifting consumer preferences. So that's what we really stand for. We're best known, and you pointed it out for about a year ago, because in fact it's our 1-year anniversary of our campaign. We're best known for our campaign at ExxonMobil, where we successfully placed 3 people on their board of directors. And we did so by just owning 2 basis points of the company. And what was really, I think, powerful about our campaign was sort of 2 things. One, because we focused on the shareholder value argument, we were able to bring other people along with us. And then secondly, we are a firm that likes to own and engage. And I think that campaign demonstrated the value of owning and engaging versus, I think, the predominant model of investing in this space, which is much more about divesting or excluding companies you don't like.
Especially fossil fuels. That's the divesting is more common than getting in there and trying to make changes.
That's exactly right. I mean, the climate investing, broadly speaking, has really been built primarily on the concept of divestment, which is that if you don't like it, you don't own it. And so what you tend to see from a lot of climate strategies is that they either wholesale exclude or lean away from the highest emitting companies in our economy and the highest emitting sectors in our economy. We sit in a very different category. We're in an own and engage category. So we actually, in our portfolios, go to where the emissions are. And our theory of change is that by acting like an active owner and having a really strong investment thesis, that we can drive impact through that channel.
And what are your goals, like with an ExxonMobil? You're not going to convince them not to look for oil. What would be the objective?
Why don't I start with Exxon, and then I can broaden out to largely what we focus on when it comes to engagements. So with Exxon, our campaign was centered on a few things. The first was actually governance. And in many cases, what you tend to find is environmental and social issues ultimately are governance issues. What we were focused on was the reality that Exxon, like all big energy companies, is operating in an industry that's going through huge transformation. And in fact, that they would benefit by having additional experience on their board, both in energy as well as transformational energy. And that was, sort of the bedrock of our campaign. Beyond that, we were focusing a lot on their capital allocation strategy. They had a history of chasing production growth. And so we very much centered our conversation on that. And then lastly, we really wanted to push the company to think about how to make money in a world with a lower carbon footprint. So really thinking about their strategy in their lower carbon footprint businesses. And that was sort of the sort of three-part approach we had to the campaign. Our goals when it comes to engagements, they all vary depending on the industry we're operating in, on the company we're engaging with. I'll say since our Exxon campaign, we've actually had a number of engagements. It's an important part of what we do is working closely with companies, all of which have been very collaborative. And they're centered in exactly the spaces that you can imagine. We're going where the emissions are, which for those who don't know, 75% of global greenhouse gas emissions come from agriculture, transportation, and energy. So this is really the heart of the energy transition. And in many cases, what we're looking to see from companies in those spaces are, number one, companies that have a long-term strategy to decarbonize. They have management teams, number two, that are committed to it. But importantly, and I think this is really where the rubber hits the road, they're making the short and medium-term investments they need to make today to demonstrate that they're on that path.
That's super. That's a great explanation. Are you working alone? Are you working with other funds or other investors? Are you trying to get a consensus or a big group of people to do the same strategy?
Well, working across the ecosystem is really important. I mean, public markets equity is a team sport. That's how when you are a public markets investor, even if you're one of the largest investors in the world, you still only own a certain percentage of the company. So in order to affect change in the public markets, there is an important part of the ecosystem. In the case of Exxon, it was a very direct linkage. We owned 2 basis points of the company. We needed to make a strong enough argument to other shareholders that they wanted to vote in alignment with us. And so in that case, I think the connection points were very clear. A lot of the other things we do engage across the ecosystem and various partners. But ultimately, I think our main strength, or what I view to be our main strength, is one, we are active investors. So we're coming at the conversation with an investment point of view. And number two, we are engaging across the ecosystem. So I think the points of view we have and the touch points we have outside in the market just make us more able to understand the full picture of what's going on. So that could be broad stakeholders, other industry groups that are very embedded in a particular topic. And I think all of those areas help to inform our viewpoint, both as investors as well as in our engagement channels, all of which makes our thesis stronger. And so I do think bringing other people along with you is an important part of the journey when you have an engagement focused strategy.
Yeah, no, that makes a lot of sense, because as a as percentage-wise small investor, you need other people to really get that to happen. So you have 2 ETF offerings. That's right. Do I have that right? Yeah, there's 2 of them. Yep. Could you just describe each one?
Sure. And it's a really important moment in time for me personally, because we're coming up on our 1-year milestone for our ETF business. We launched our first strategy last year, about basically a year ago. And so it's just a nice time to reflect. So we have 2 strategies, both of which are built on our principles of active ownership and engagement, but are actually quite different. So the first that we launched last year is ticker is VOTE, VOTE. We got a lot of applause for that ticker because it really does say in the name what it's intended to do. It's actually quite a simple strategy. VOTE actually is just a low-cost market cap strategy on the investing side. So it tracks an index that gives exposure to the largest 500 companies in the US. We price it at 5 basis points. So for all intents and purposes, it's very similar to what many investors have as the bedrock of their portfolio today. Low cost, diversified exposure to the market. We don't exclude companies. We don't reweight them based on a viewpoint. It's really just a market cap index. Where it's different is all the work we do as active owners. So, what that means, I think, would double click into 2 areas. First is voting. Most people don't know this, but there is a whole system of what's called proxy voting that exists in our capital market system. In fact, public companies are almost like little quasi-democracies, and they're accountable to the shareholder. And every year, there's tens of thousands of votes that shareholders vote on. Of those tens of thousands, about a couple hundred a year are on environmental and social issues, many of which are about pushing for more transparency and more accountability at the largest companies. And so with VOTE, we tend to have a high degree of support to environmental and social shareholder proposals. We don't support all of them, but since we launched, we're about, I'd say, 85% in support of the proposals that have been put out there. Really hoping to drive more transparency from the largest companies in the US on key issue areas like their carbon footprint or what they're doing from a gender diversity perspective, for example. So that's really Vote. We also do our engagements, as a firm, and so Vote, of course, when we're engaging with companies, our Vote shareholders are with us in that. That's meant to be someone's core.
Well, and I was just going to say, your expense ratio on Vote is so low. It's like 0.05. It's way lower than other SRI funds.
Yeah.
But even with that, you're able to support an engagement campaign or be able to deal with that I guess you're just trying to go for scaling it so that small percentage covers everything.
Yeah, it's low cost. It's low cost by design. I firmly believe that market cap investing should be priced in the zone of where market cap investing sits today. And so we basically did just that. And fundamentally, I think one of the trade-offs that investors feel implicitly when they invest in sustainable products is oftentimes they're having to double or triple their cost.
Yep.
And Vote is really meant to play that low cost core role in a portfolio. So we went for it and priced it at that level because we wanted to minimize friction as much as possible on the investing side and on things like fees. The benefit of having our ETF business in a broader franchise is that we're able to do that. So I think that that's a really unique element, is that we are an ETF business within a larger ecosystem. And so Vote, I think makes a lot of sense for what we're trying to do as a firm, broadly speaking. Ultimately, the largest part of people's portfolios is passive investing. So if we could have a product that spoke to that channel, that is very valuable to us.
No, and it makes it an easy argument for clients when you say, here's two options, they're both very low cost, this one engages to make positive change. It's not a big argument. It's usually the argument is, like you said, this one has 3 times the expense, and then you have to weigh, what
right.
you want to do.
Yeah, and also just, I absolutely agree. That was sort of the design, is we wanted to simplify as much as we could those elements of the conversation. We wanted to say, hey, listen, it's just market cap. The market has, over the last several decades, has demonstrated to us that market cap, low cost market cap exposure is what investors really want.
Yep.
And then when we priced it at 5 basis points, we really hoped to take that conversation as much as we could off the table and really focus on where we are, I think, quite different, which is, both the voting and engagement. And I will say very wholeheartedly, one of the most important things to us on the voting side is just our transparency. I did want to bring that up because one of the things we do that I think is pretty different from many other asset managers out there is we actually put our votes on our webpage right after companies' annual meetings. So investors can real time see how we're voting on things. Now, I don't expect that everyone in our funds are going to log on and just check it out, but it's the idea that we want the market to know, because we think that transparency is really key. And so investors with us, they know what they're getting on the investing side, and they also know what they're getting on a really basically real-time basis on the voting side.
You mentioned that you're part of a bigger ecosystem. Are you owned by a larger ETF fund or something?
No, we're just the engine number one franchise, but we have multiple strategies. So one of our strategies, or strategy areas, I should say, is our ETF business, which has our 2 ETFs. I mentioned Vote, and I'm happy to give you a little bit more on NETZ, our second one. We also have a concentrated long-only fund. That's another one of our product offerings. And then we have a sort of centralized investment and active ownership capability. But broadly speaking, we sit within a larger platform of the engine number one franchise, which I think is just a really big strength of ours as a firm. Because our concentrated equity fund, that's where we can make really high convicted, very concentrated bets. And with something like Vote in our ETF business, we've got low cost, diversified exposure. And so I think that breadth is really valuable.
Gotcha. No, that's great. And how about the other one, the NETZ one?
Yeah. NETZ we launched in February. NETZ is honestly, for me, a really exciting product. So NETZ stands for Net Zero. It's the engine number one Transform Climate ETF. This is an actively managed, high conviction strategy. It's 20 to 40 names. And with this strategy, we're looking to invest in the companies that we think will drive and benefit from the energy transition. And so honestly, with this product, I think we're flipping the whole conversation of climate on its head. As we talked about, the prevailing view for many climate strategies is if you don't like it, don't own it. And so they tend to have little to no exposure to the highest emitting parts of our economy, which is, as I mentioned, energy, transportation, and agriculture. our perspective is that this is literally the heart of the energy transition. That is where the transition is happening. And so we actually own the largest incumbents in many of those spaces, but these are companies that we believe have that long-term commitment, have a strategy in place, are making the necessary investments, and we think the market will reward them for that. So this is absolutely meant to be an impact meets investment performance strategy. We want to be delivering to our clients superior long-term returns. And our thesis is that a lot of these negative footprints, the impacts that companies have, for example, huge carbon emissions, over time will increasingly be reflected into the value of their company. And so we think that there's an opportunity to invest in companies that may not be well understood or well priced by the market, because the market tends not to consider things like that. And so what you end up seeing from our portfolio is exposure across energy, ag, and transportation, strong engagements with companies to help us sort of keep companies accountable and accelerate our thesis. And we really see its role in a portfolio as a satellite. It's in many ways meant to be a complement to both. This is the part of the portfolio where we hope to drive out performance. It's really high conviction and concentrated, and reflects all of our investment views.
Yeah, it's an interesting portfolio because NETZ is not your typical SRI list of companies. But can I just, so the idea is you're getting companies that, one, I get it, they're making a big impact on the environment, and you'd like to help them shift and benefit or do well in a changing environment. But you're also selecting them, saying they're going to outperform because they're on board with shifting and being, I guess, positive. So the market might not be pricing them correctly.
Yeah, I mean, that's absolutely right. So a couple points to build on that. Fewer than 200 companies account for 80% of corporate industrial greenhouse gas emissions. There is no path to net zero that does not go through the largest incumbents. And so while much of the conversation in climate gets focused on young green technology companies, what's often missing from the conversation is the power of transformation and the reality of transformation that has to happen. And so let me talk about an example to maybe bring it to life. I think transportation is a really interesting part of the ecosystem. Often forgotten in the conversation are some of the more traditional players in the space, like General Motors or Ford, who are making huge investments and commitments to being all electric. Beyond that, another part of our thesis is that it's not just about the automakers going all electric. There's a lot of inputs that are needed to go from where we are today to a company to producing all electric vehicles, including really key commodity inputs like lithium or aluminum. And so our investment thesis about the opportunity in transportation, it's not about just one sector. It's broad-based about what it will take for transportation to get to all electric and net zero. And so that's how we think about the world. I think agriculture is another really interesting space. John Deere is a company in our portfolio. And what most people don't know about agriculture, if you were to think about agriculture, most people would think, all the emissions is coming from all the tractors. But in fact, the majority of emissions from the agricultural process are coming from inputs into the farming process, like fertilizer. And in many cases, the inefficient use of fertilizer, you just think about blanket spraying the fields. And so technology like precision agriculture, where you're using AI to be more focused in where these chemicals are used, helps. It's almost like a win-win-win. It's great for farmers because it means they're reducing the inputs into their farming process. It's obviously great for the environment because we're limiting waste. And it's good for a company like John Deere because it means market share. And so those are the types of investments we're looking for, where we're trying to link impact to shareholder value. And we think there's a number of them across these different industries.
And some of those, just John Deere, since you're talking about them, as a shareholder, you're in discussions with them about what they're doing, or you're just seeing this is an opportunity we want to jump on for the ride?
Well, we've got, like I said, 20 to 40 companies in the portfolio. We are not engaging across all of them. We couldn't. In fact, one of our core belief sets is that we need to be really focused in our engagements. We have to go deep. We have to have a viewpoint and a recommendation. But we are definitely actively engaging across the portfolio with a number of the companies there. And our role, I think, spans a wide range. To some extent, it's just, we operate across these ecosystems. I think we have unique insights, sharing our perspective. it's also keeping companies accountable. I mean, like I said, a lot of these companies have very long-term commitments towards net zero, but it requires investments in the short and medium term to get there. And so it's sort of making sure they stay on that path. And then in some cases, it's trying to push to accelerate because we think there's a really big unlock for opportunity. So it really does span a wide spectrum. But engagement is a really important part of what we do. We sort of had that. I think we have a mentality almost like a private equity owner when it comes to engagements. I mean, our viewpoint is whether you own a share of a company or you own the entire company, you're an owner.
Right.
But that is a very different concept of engagement and ownership than what you tend to find from large asset managers. Large asset managers, and you'll see this at the end of the year if you ever read their impact reports, it tends to be that they focus on quantity, talking to as many companies as possible about as many issue areas as possible. And so we actually just have a very different approach, which is that targeted, focused, really specific engagement work, which I think is just a very different thing altogether than what we tend to see out there.
Can I ask you do you have another example of an engagement that you've taken on with a company?
Well, yeah, one we've talked about, we were talking about it as early as fall last year, is we have been actively speaking to General Motors and a number of auto companies actually about their push to becoming all electric. They're a great example of a company that does have a long-term commitment to being all electric. Their management team is very committed to it. They've been demonstrating the necessary sort of short and medium-term steps. It's very collaborative in nature. And so, that's exactly the type of dialogue that we have. And we try to do that across a number of companies in our portfolio.
Great. That's super. Well, Yasmin, I really appreciate you spending the time and informing our audience about Engine Number One. If people want more information, where can they get more information?
We are all about sharing information. So if you visit enginenumber1.com, we have a lot of information on there. We've got short videos, we've got lots of thought leadership. If you ever want to know how we voted, we've got a section for that as well. And then for the beauty of our ETF business, one of, I think, the strategic value propositions for our ETF business is that anybody can invest in our ETFs. So if you click on the ETF page, you can learn a bit more about VOTE, V-O-T-E, and NETZ as the two strategies we have in market now.
And your website again is it just engine1.com?
Engine and then number1.com.
Number1.com. I'll put a link in the show notes. That's great. All right. Thank you very much for your time.
Thanks so much for having me.
Thank you for listening to AIO Financial. This podcast is for informational use only. We are not making investment recommendations. Please read the prospectus and discuss it with your financial planner to see if this is appropriate for you. This is brought to you by AIO Financial. If you need help with any of your finances, please contact AIO Financial for a free meeting, AIOfinancial.com. We do offer an investment course in addition to one-on-one financial planning services. We offer an investment course and a community with forum and live Zoom calls to answer your questions. We appreciate any comments, any questions you have, any feedback. Please leave them wherever you find this. And then please leave a review and subscribe if you like this content. It'll make it easier for others to find this. All right. Thank you. Take care. Bye.